Hi everybody, Brian Matthey from Verico, the Mortgage Professionals in Kingston, Ontario, and welcome to another edition of Mortgage Straight Talk. In today's session, I love talking about what I'm going to talk about. This session is called The Tax Man Giveth. First thing I'm going to tell you is I'm not a tax expert, so you're going to have to consult with whoever does your taxes to determine whether this strategy is good for you. But I have used this strategy with a number of my clients. It's a very, very simple strategy to use the tax man's money to pay your mortgage down. So in the past, certainly in my parents' era, there was a big focus on paying your mortgage down because interest rates are very, very high. But today, with interest rates being as low as they are, there are alternative strategies that you may want to consider when it comes to paying down your mortgage. And again, if you have a lump sum, you want to look at that lump sum, look at the tax consequences of that lump sum, and look at it in this fashion perhaps before you do anything with that money. So, in very simple terms, if you had $1,000, and at today's mortgage rates, if you put $1,000 against your mortgage, you'd save $34.35 a year in interest for that $1,000 that you put against your mortgage. If you took that same $1,000 and your marginal tax rate was 30%, you'd end up with a $300 refund, which really would take you 8.7 years to earn that same interest saving on that same $1,000 that you put in. What are you going to do with the $300 refund? It's very simple. You're going to take that $300 refund. You can do two things with it. You can apply it against your mortgage as a lump sum reduction, courtesy of the government, or you can put it into an RSP and start another $1,000 towards your mortgage. Basically, that you're going to be looking at, again, $1,000 into that RSP and only have $700 to save. Now, if you got a rate of return, if you still have the $1,000 over here in your RSP and you're using that tax money, and even if you've got a rate of return of 3.39% on your RSP, you're going to break even between what you're paying on your mortgage at today's rates of 3.39 or 3.49. We're very low right now. You're going to break even. And you've still got that $1,000 sitting over there and growing for you in an RSP at the same time. So, the strategy may not be for everybody, but if you have a lump sum to put against your mortgage or you're considering doing a mortgage prepayment, consult with your tax accountant or whoever it is that does your taxes to ascertain if there's going to be a significant saving for you by putting that monies into RSP and using the government's money to pay your mortgage down. That's it for this edition of Mortgage Straight Talk. I'm Brian Matthey with Verico, the Mortgage Professionals. Thanks for watching.